Boston is like a lot of markets we've been talking about lately, where apartment demand and revenue growth have really slowed down over the past 6 months. But probably not anything to be too worried about. Welcome to Apartment Market Dynamics from NPF Research. I'm Jay Parsons with your Boston update. To understand the Boston apartment market, let's first take a step back and look at the U.S. as a whole. The first 9 months of 2010 were boom times, with apartment demand at near historic levels and rent growth coming on strong as well. But over the past 6 months, revenue growth has slowed down a good bit in most of the U.S., and Boston really fits the overall story to a T. In fact, Boston was one of the leaders in revenue growth and apartment demand for the U.S. in the first 9 months of 2010, until we saw things slow down in the past 6 months. But that isn't too surprising for Boston. First of all, this is probably a market where we saw a lot of pent-up apartment demand burned off throughout most of 2010. And also, the winter months in Boston tend to be slower leasing periods anyway, so again, probably not too much to be worried about. So with that said, let's take a look at some numbers, starting with the apartment demand story. You see Boston took a big hit when the economy was at its weakest point of the cycle back in fourth quarter 2008, but it's actually been pretty strong since then, nearly 18,000 units absorbed on net over the past 9 quarters. And that includes net move-outs that you see in 4Q 2010. And in 1Q 2011, you see apartment demand was essentially flat. And we'll see that story play out as on the occupancy front as well. Occupancy fell as low as 93.4% during the recession, and that's real low for Boston, where occupancy rates are typically really tight. But it bounced back in 2010, hitting a high of 96.5% in third quarter 2010. It's come down a little bit since then, now at 95.7%. But that hasn't precluded rent growth. Same-store rents in Boston climbed 0.6% in first quarter, and they're up 4.8% in the year ending March. That's well above the U.S. norm of 3.3%. With all that said, Boston's overall numbers look even better when we take out the suburban areas. Let's take a look at Boston's two inner core submarkets, starting with the in-town Boston submarket. Occupancy there at 97.3%, up 1.7 points annually, and same-store rent growth of 9.2% year over year. And it's a similar story next door in the Cambridge University area. Occupancy up 2 points annually to 97.1%, and year-over-year rent growth of 7.5%. Big growth in those two urban core submarkets. Looking ahead for this Boston metro as a whole, we do expect to see apartment demand pick up again in the next 6 months, but the real growth should be on the pricing side. Look for significant rent growth in Boston in the near future. That wraps us up for Boston. Until next time, for Apartment Market Dynamics and NPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.